properly. It's like anything else. You're going to golf, you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grandy has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro. Phil Grandy. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grandy.
Bye.
And welcome to my podcast. Okay, so people don't understand that the stock market, again, is not the economy. When people see the stock market going up and big moves and every day another all-time high, it doesn't mean the economy is doing well. And in fact, it doesn't mean the stock market are making those new all-time highs or those earnings that they tell us about. Here's what I mean. If you take, for example, earnings, we have these earnings come out, right? And they always tell us how they beat the street by a penny. They beat the street by a penny. Boy, aren't earnings great? Most of it's a lie. It's not true. If you take the S&P 500 since 2022, the real proof is out of the 500 companies, only 10 have earnings. And they're all the same 10. You know which ones they are. They're all the AI, all the tech, all the semis. There's only 10 companies, 10 stocks. They lie through their teeth when they tell us all these earnings. They don't have earnings. They have no earnings. In fact, 490 of the stocks in the S&P 500 don't have earnings. This is a both-faced lie. They don't. I mean, it's amazing, but it's the truth. So, and that's pretty dangerous if you think about it. And the other thing about the stock market, you got just 10 companies. Now, those 10 companies are the Magnificent Seven. You got Berkshire, that's outside the Magnificent Seven. I think Walmart is the other one. That's it. Since 2022, they've been lying to us about how these companies have great earnings when, again, 10. That's it, just 10. Now, the top 1% wealth, the wealthiest 1%, they have all the money from the stock market. We talked about that the other day. If you take all the stocks, an aggregate of all the stocks, put the wealth together, it's about $47 trillion. If you take the top 10%, about $43 trillion of the $47 trillion is their wealth. It doesn't filter down through. And forget your 401ks, they're a joke. You saw what happened to you between February of 2025 this year, when the market went down about 20%. You've been struggling to get that back. And you hear how, look at the market, the S&P's up 35%. Well, how about your 401k? It's up 5%. What are you, nuts? But there's something else that's going on. AI. All we hear is AI, AI, AI. It's worse than the dot-com days. And they're not leveling with us. What's really scary, much more scary than it was during the dot-com days, is the AI. Because what we're finding out is they got to raise a tremendous amount of debt. I mean, you're talking this year alone, they invested about 57 trillion into this infrastructure, what you call data centers. And do you know the spending of the 57 trillion on these data centers is most all of our economic growth? We are dependent solely on these AI data centers. What are you, nuts? It's insane. Now, all this money we are now finding out is not supporting these investments. We have this dependency that's nuts. My God. So if they fail, and they could fail, this would be far worse than when we saw the NASDAQ 100 in 2008 drop 80%. This could be far worse. They have gone nuts with this AI stuff. Now, it's fantastic. It's what we need. It's the future. Nobody's arguing that. But Wall Street always does what's best for them, not America. And certainly not Main Street. And all this hype on OpenAI, how many new all-time highs do we had in the S&P so far this year? What, 37, 40? It's always the announcement that Oracle or AMD or another company is doing a deal with OpenAI. So just think about this for a moment. The potential for a crash in AI, much worse than the dot-com days. A projected 1.5 trillion in debt for these AI data centers? And they're projecting there's going to be a high failure rate. Remember when they did this solar, all that solar investment? That was going to be the big deal. Remember how Obama took care of all his friends who got him into the White House, and they gave him all these contracts, and the whole thing blew up? This is what they're really worried about with AI. But let's go back for a moment and think. If you have all these, take our stocks, our tech stocks, 10 stocks is driving this whole rally. 10 stocks. And earnings growth is a lie. Now listen to this. Here's what they do. Listen. Here's what this guy says about earnings.
One of the also reasons why this market has been so resilient is corporate earnings.
Really? No. But why stop there? Why don't you tell the truth? Tell the truth. Here, listen what he says.
One of the also reasons why this market has been so resilient is corporate earnings.
Well, why don't you go on and say, but there's a problem with corporate earnings. Only 10 stocks out of 500 really have earnings. The other ones don't. They have zero earnings. Oh, they're not going to say that. And how about this?
Severe reversals in some of the hottest high momentum sectors and disappointed responses to a couple of major earnings releases pressured the indexes in a jagged rotation toward more defensive stocks. The S&P 500 index fell 0.5%.
Oh, why don't you tell the truth? Why do you stop there? Tell them what happened yesterday. Texas Instrument. Right? Took everything down yesterday. Texas Instrument. So again, we're dependent on these few stocks. Let's talk about, they talk about how productivity is doing and wages are good.
I think the market being at 6,700 isn't a coincidence. I think you have an alignment of productivity, an alignment of policy, and I think that we see that continuing to go forward.
The guy's a total liar. Here, take a look at my chart. The S&P 500, 10 biggest companies are pulling away. Take a look right here. See it? Pulling away. 10 companies from the 500. So that's that chart. But they're not going to show you that chart. Now, let's talk about productivity. Hear him talk about productivity? Yeah, productivity's fine. But here, listen to this guy here, what he says. He says, he's talking about how great wages are.
Well, on the last part, I'd probably hit you with a little bit of a fact check, which is that real wages have been going up
several months.
Last several months.
Not
I think
disagree.
and I think that's really important.
Okay.
Yeah, well, really important. Wages have really been going up. No, they haven't. Here, look at this chart right here. Here's productivity. Productivity's been going up. There's no problem with productivity. Our productivity's up 238% since 1960. But let's take a look at our hourly compensation. Boy, that really sucks. Look at that divergence. You're up 109% in wages compared to 238% in productivity. That'll take a stock market down pretty quickly. Unbelievable, isn't it? So when you hear him talk about earnings,
one of the also reasons why this market has been so resilient is corporate earnings.
That's not why we're resilient at all. The earnings are terrible. The earnings have been terrible.
5 minutes.
I mean, think about that again. You have 10 stocks. That's it. Everyone goes whistling along every earnings season. We're in earnings season now. They're all celebrating. Every time, beat the street by a penny. Beat the street by a penny. I'd like to know who gets the penny. But everybody beats the street by the penny. Well, why don't you come out and tell the truth? There's only 10 stocks out of the S&P 500. The S&P 500 is our market. So you got 10 stocks. That's it. The other ones aren't making earnings. So what does that mean? It means 10 stocks are masking 490 stocks. There could be a worse crash than the dot-com crash or the housing financial crash. And that's why I always tell my members, since 1998, I've been doing this and teaching people just like you how to trade stocks. There's no such thing as a hot stock. And you can't, if you're sitting there always depending on your stock going up, 90% of people that own stocks always are sitting there depending on, my stock's got to go up. I hope it goes up. I hope it goes up. Are you nuts? There's no way to make money. You can't make money trading by just always hoping your stock's going to go up. The only people that make money, and that's why there's few people that make money in the stock market. Very few. 90% don't. And you can check it out. I'm not just saying that. I'm not lying. Check it out. Only very few people, 90%, do not make money in the market because they don't sell short. They don't know how to sell short. And when you got a situation where we got AI, right now, our whole economy depends on AI. And it is so dangerous, AI, and they're not being honest with people because AI is an experiment. And how many times do we hear about every time the market starts going down, AI starts going down? What do we hear? I think I have some of those cuts, but we always hear about, we're not getting a return. We're not getting a return. We had a couple of those. I think we have a couple of those. Let me see if I have them where they're talking about they didn't get the returns. You have that? Yeah. Here, listen to this. Listen to this. And boy, they mask it right away. They don't want you to know. Here we go. Listen.
The S&P 500 fell 0.5% on Tuesday, dragged down by. Let
me try it again. Sorry. Let's reset it.
The S&P 500 fell 0.5% on Tuesday, dragged down by 3% or somewhat greater declines in the shares of NVIDIA, Amazon, and Oracle. Scrutiny of NVIDIA's $100 billion deal with OpenAI, investing in the company, which would then recycle some of the money back to buy NVIDIA processors, raised some questions about the underpinnings of demand in the current phase of the aggressive AI build-out.
What did I just say? What did I just say? But he does it nicely so he doesn't upset people. AI is an experiment. And so now, and every time we get news like that there's a report comes out. I remember when I think it was MIT came out with a paper saying all these people investing in AI, they're going to get screwed. They're not getting the returns they thought. And boy, did they cover it right up here. Like this one here, they covered that up with this.
The S&P 500 gained 0.4% on Monday with a huge boost from the 4% jump in NVIDIA after the chip company announced a $100 billion investment over time into OpenAI to develop data centers for AI training together.
Do you realize this OpenAI is the whole deal? Everybody's making a deal with OpenAI. The risk, the dot-com days didn't have this kind of risk. And then all of a sudden you'll hear another negative report come out about, gee, I don't know if we're going to get our money back on all this AI.
The S&P 500 index fell 0.4% on Tuesday. Shares of Oracle shed more than 2% on a report by trade publication The Information that its AI data center hosting business has so far shown thin profit margins.
Oh,
the S&P 500.
Really? Thin profit margins. But see, they're not leveling with the people. Now, you don't have to worry about any of this if you know how to sell short. So with all this hullabaloo and this pumping and pushing and pumping and pushing, like my members, I keep telling them, we're going to keep buying this crap. But we know when it's over. We know when it's going to turn around and start pulling back, and we make money. The people who get crushed are the ones who are following right along with all this AI news, jumping in. They can't wait to get all these AI opportunities. And when the market turns or a stock turn starts going down, they sit there like a deer in headlights, don't know what to do because they've been told not to short. You're going to lose everything. You're going to lose your firstborn. All lies, because the industry wants to short you. Wall Street wants to take your money. That's why they don't want you to short. That's why they scare you, tell you you're going to lose everything when you short. Because they want to be in a position to take everything from you. That's why they do it. So it doesn't matter if AI is good or bad. What matters, do you know how to protect yourself? By selling short, we'll help you. Be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here. And it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When making wise investment decisions, Phil Grandy has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
You're back.
And welcome back. So, again, let me just run through these again. When we look at, and they're telling us how good things are, and again, it doesn't matter to good traders. My point is, a good trader, he doesn't care if we have bad news or we have good news. Matter of fact, bad news is really good news because you make more money when there's bad news. You make really much more money when you get yields going down, because when yields are going down, that tells you the economy's in bad shape. Something's wrong. When gold is going up like it's going up crazy, right? 92%. Our GDX, our miners went up 92%. And oh, by the way, on October 8th, as I told you yesterday, I told all my gang members on October 8th, that's when the market went up and hit 4,100. The gold hit 4,100. Then on October 10th, the banks came, when it hit 4,100 on October 8th, I said to my members, sell, sell, sell. Don't get out totally, but sell into this rally because we got all the FOMOs jumping in here. And who are the FOMOs? Those are the tourist investors. They don't know what they're doing. They have no idea what they're doing. They're gamblers. They don't want to learn. They're always looking for hot stocks. They're the ones that sit there, and every time Cramer says something about a stock, they write it down. Or somebody else says something about a stock, they write it down and they buy it. They buy it right at the top. So the idea is that the stock market, you shouldn't be relying on, God, I hope my stock's going up. Gee, I hope IBM's going up. A professional or the person that makes money in the market, he doesn't care. He doesn't want stocks going up or stocks going down. He wants them going up and down, up and down, up and down. He wants action. That's how you make money. But guess what? What did they take away from you? What did these people on Wall Street take away from you? They made sure you couldn't short. They took the advantage away. It's like you bought a brand new car and you went to pick it up. You said, oh, what's this? There's no reverse. There's no reverse. Would you drive out the car dealership? Well, tourists would. Tourist traders would. They don't know the difference. You wouldn't. You're smart people. You have to be if you're listening to me. You wouldn't do that. You say, no, I got to have reverse. It's the same thing with the stock market. If anyone believes that all these shows that you see, or CNBC or any of them, Fox, all these financial shows, they really know what they're doing? Oh, they're on TV. They must know what they're doing. No, they don't. Once you have the skills to short, that's your insurance company. That's your insurance policy. That you will always be making money in the stock market, no matter what news there is, no matter what direction the stock's going. But if you don't know how to short, you realize you got to be trading every stock to perfection. And if you trade more than 6 stocks, you're never going to make any money. You shouldn't have any more than 6 stocks. That's the maximum. Because there's only a certain pattern that keeps coming around. It's called the sweet spot. And they don't want you to know that either. A sweet spot is a pattern in which the maximum amount of money goes into a stock in a very short period of time. This is where all the pros come in and start buying. And then the opposite side, we're in a very, very short period of time, maximum amount of money being dumped. Stocks are being sold in a short period of time. So if you know how to execute both, buy, sell short, you're always going to be making money in the stock market. We don't care what the news is. We could care less about their lies. So if you look at the disconnect, again, between productivity and a worker's wages, how can they turn around and keep telling us the consumer's doing good? They're strong.
It seems like everybody's saying the consumer is much stronger than all of the worries out there.
How could they be much stronger when production's up 238%, wages are up 109%? Well, they're not strong. But they're lying to you, just like they lie about, oh, boy, is the S&P strong, the S&P 500. No, it's not. Now when you only have 10 of 500 stocks doing well, that's it? That's insane. So the stock market, again, the earnings growth is a lie. And all of this, and as far as the consumer, how well the consumer is doing, where are they getting that from? Because the economy's certainly not doing well. Our national debt is $38 trillion, historic. Corporate debt, $21 trillion. Corporations increased in bankruptcies up 47% over 2024. Household debt, $20 trillion. That's historic. We never had household debt at $20 trillion. People are choking. Now, what's killing us is the increase in money supply. It's got to stop. This is how they create these false markets. This is increased money supply. The reason behind it is to create a bubble. And when you have an increase in money supply, every day they're pushing money up. All they got to do is they take that money and give it to the CEOs to do stock buybacks. Now, we have an undisclosed bank losses of $517 billion, but they're not telling you that either. They tell you how great the banks are doing. The banks are doing terrible. And when you have a record drop and construction spending, that's where most of our jobs come from. But they're not going to tell you the truth.
We have various reasons to be cautious in the markets. The government shutdown is still ongoing. Trade negotiations with China. There's a number of reasons to have caution, and yet we're at these all-time highs in the S&P. Investors are unfazed. Even the credit risks that we had news of the other day, we're looking past that. Investors are looking past that.
She's right. Investors are they're just going along like everything's wonderful. Look, again, gold. Think of gold. And I hope you haven't gotten out of your gold either. I told my members, don't get out of gold. Take profits. Matter of fact, on October 8th, when the market gold prices broke out, 4,100, I told them to take more profits, a lot of our profits. And then when the banks came out and announced that they were going, not the banks, the banks came out and announced that everybody start buying gold because we're going to go to 5,000 an ounce. I told everybody that day, sell, 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 but don't get out completely. Get ready to short, but don't get out completely. Now, we haven't shorted our gold stocks because we don't have a sell signal yet. But one signal we got that's very scary is our margin debt to money supply. We talked about that yesterday. Here, you can look on the chart again. This is stuff they don't want you to know. The leverage is awful. So you got the top 10 percentile controlling 43 trillion of the aggregate value of all stocks put together of 47 trillion. So can you imagine we have 47 trillion worth of stocks and 10% of our population controls almost all of that? Something's really bad. Something's really wrong. But what's really wrong is when the market does break, because of that maybe, or the market breaks because of all this BS with AI, and when we're pumping in every day 1.5 trillion, another 2 trillion, everything's in these AI projects. All these companies are pouring money into OpenAI. And remember, OpenAI, they have to rely every day on this continuous money, this continuous capital. And you saw the White House, you saw the president bringing people to the Oval Office. Oh, here's somebody else going to give another 200 trillion or 500 billion to OpenAI. But has anyone put out a financial statement showing that OpenAI, these investments, you got to return at 20% or 15 or 10, just like with go back to the old days under Obama, when he took care of all his buddies on Wall Street and started to fund everybody with those stupid solar panels. Remember? That didn't work out very well. We lost a fortune.
5 minutes.
So again, when you have manufacturing, that's our bread and butter. It's gone. Since 2023 February, do you think by losing 178,000 jobs that this AI, someone's putting in 1.5 trillion? Given OpenAI 1.5 trillion, some prince from Saudi Arabia giving 1.5 trillion? You think that's going to take care of the poor folks who lost their job in manufacturing? 178,000 since February. That's unbelievable. That's below the pre-pandemic levels of 2018. And in the last 4 months, consecutive months, manufacturing jobs have fell by 42,000 to 12.7 million. Let me repeat that. 42,000 to 12.7 million. But what are you going to be told on TV?
If you look at the strength of the economy, we've got GDP now growing at about 4%, and the strength of the fiscal situation in the U.S.
Well, why don't you tell them the truth? Most all of that GDP is coming from an experiment called AI, which we don't have any numbers yet. Oh, but he's not going to say that, is he? No. He's going to tell us AI is not a bubble.
You know, Google searches for AI bubble. You're not concerned about that just yet.
No, so we're not calling this a bubble again, especially on a valuation perspective.
They said that with .com. Remember, .com wasn't a bubble. The .coms, none of them were bubbles. This is what they are. They're bubble makers. The guys who control Wall Street, not the top 1%, not the top 10%. Don't confuse the top 1% with the 1/100th of 1%. There's about 2,000 of those in our country. 1/100th of 1%. They control everything. And I always play my favorite, George Carlin, who told us in 2008, who are these people? Not the top 10, not the top 1. Who's the 1/100th of 1%?
You have owners. They own you. They own everything. They own all the important land. They own and control the corporations. They've long since bought and paid for the Senate, the Congress.
And these are the guys that are helping Trump with his ballroom. And by the way, I think that's wonderful, that ballroom. Who are these morons that are sitting there? Oh, look, he's destroying the building. Oh, look at the building. He's destroying it. Aren't these people just pure morons when you see them? They don't understand if you're going to... Didn't anybody ever, these morons, didn't they ever remodel their house? Didn't they put a new porch on? Didn't they put a new kitchen on? And you always create a damage before you start creating new. Who are these? Are these people that stupid? The answer is no. They're jealous. They're angry because they're jealous. They're mad that Trump will have a legacy in that White House from now to the end of time. That's what they're angry about. That's what they're angry about. What a wonderful thing. This man is building onto our house, and it's not costing you or me a penny. And who's helping him? The top 100 of 1 percentile. And who's that top 100 of 1%? Not the top 1%, the 1/100th of 1%.
You have owners. They own you. They own everything. They own all the important land. They own and control the corporations. They've long since bought and paid for the Senate, the Congress, the state houses, the city halls. They got the judges in their back pockets.
Yeah.
Wow.
Oh, wow.
Wow.
Yeah. So they're putting money into the White House. What do we care? It's free. It's not costing us a thing. Did you see that? Did you see the ballroom? It's going to be magnificent. Wouldn't you rather have that than Obama running around? Remember when he first came president? He runs around the world, bends his knee and apologizes. Oh, I'm so sorry. The United States is so strong. Oh, we apologize for being strong. Oh, we're so sorry. We'll become a socialist nation like you. We're going to give out Obama phones. Isn't that crazy? So look, back to the market. The stock market is the best place in the world to make money if you know how to sell short. Then you are almost guaranteed to make money. Without that skill, you're not going to make money in the stock market. Join us. We've been teaching people like you since 1998. Let's help you.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.